When the world changes, only the prepared will survive. Think about this for a moment. What if everything you believe about money, about the economy, about investing, is already outdated? What if the world is changing faster than you realize, and you're not ready? Right now, it's not just one country facing issues. It's not just one sector affected. The entire global system is trembling. Recession looms. Inflation bites. Geopolitical tension rises. And the financial markets, where many people place their hopes for the future, have become a brutal battleground. This isn't just about money. It's about direction. About choices. And about how you respond when the storm hits. Because one thing is certain. The storm will always come. Chapter 1: Why is the world changing? Let's start with the basics. What's really happening? Technically, we're approaching, or already in, a recession. What is a recession? 2 consecutive quarters of negative economic growth. But those numbers are just the surface. What really matters is the impact. Recession means layoffs. It means businesses collapsing. It means investments losing value. It means people, maybe even you, start asking, is my money still safe? What should I do now? Now let's look at how the system tries to patch the crisis. When the economy slows, central banks act. Their main tool, lower interest rates. The goal is simple: make borrowing cheaper. Boost consumption, stimulate the economy. But there's a big consequence: massive cash flows into the markets. Money is printed non-stop. And this is where the big problem begins. Because when you print too much of something, its value drops. We know that applies to any item. If tomorrow, we discovered twice as much gold in the world, gold prices would fall. The same applies to currency. If the supply of dollars skyrockets, its value drops. And that's exactly what's happening. But are people starting to distrust the dollar? Yes. Slowly, but surely. Chapter 2: China, the US, and the Silent War. One of the biggest players in this drama is China. They used to be the biggest buyer of US Treasury bonds. Why? Because when China traded and earned dollars, they didn't just sit on them. They used them to buy US government debt, Treasury bills. But in the past 5 to 10 years, that trust has started to fade. China now sees the US as an increasingly unpredictable trade partner. Trade wars, tech sanctions, and unending geopolitical tensions. And quietly, without much publicity, China began selling US bonds. They offloaded hundreds of billions of dollars. And what did they buy instead? Gold. Chapter 3: Why gold? Gold isn't a productive asset. It doesn't yield interest. It doesn't create products. It just sits there. But gold has one key strength: it can't be printed. And in a world where trust in fiat currencies is starting to fade, gold emerges as a symbol of stable strength. Imagine this: if you're a big investor, or even a country, and you know the dollar is weakening. Where would you put your money? You can't rely on stocks during a crisis, too volatile. Bonds? Low yield and potentially falling in value. Crypto? Too young, too speculative. Gold becomes a logical choice. Not because it'll make you rich overnight, but because gold will never go to zero. Chapter 4: Investment Strategies Amid Chaos. So now the question is, what should you do, as an investor or an ordinary individual, in all of this? Should you panic? Should you sell everything and hold on to cash? Or is this the time to flip your perspective completely? Let's begin here. Chaos is not the end of everything. In fact, it's in chaos that real opportunity arises. A crisis is when the market is having a massive clearance sale. Great company stocks can drop by tens of %. Properties are sold at bargain prices. Investors panic, selling not because they want to, but because they have to. And when everyone else is running, those who remain calm, win. So what's the strategy? Strategy number 1, build your emergency fund. Before we even talk about investing, make sure of one thing, that you're not forced to sell your assets when prices are low. That's why emergency savings are so crucial. Having 6 to 12 months of expenses readily available will give you the freedom to think clearly. No pressure. No panic. Even the best investor can be swept away by fear without a safety net. Strategy number 2, dollar cost averaging, DCA. Don't try to time the market bottom. Most people who try fail. Instead, use a simple strategy employed by great investors, dollar cost averaging, investing regularly and gradually. This way, you're buying when the market is down, and still buying when it rises. The result? A stable average price and reduced risk. It's not a get-rich-quick scheme. It's a get-rich-consistently strategy. Strategy number 3, diversify your assets. In a crisis, you can't predict which assets will survive and which will crash. That's why diversification is your best friend. Combine stocks, especially large, crisis-resilient companies. Gold, for hedging and stability. Bonds, from strong governments or corporations. Real estate, if you have the capacity. And yes, even a bit of high-risk assets like crypto, if you understand the risks. Diversifying doesn't mean owning everything. It means choosing wisely, based on your goals and risk tolerance. Strategy number 4, understand fundamentals. You're not buying numbers. You're buying value. Don't just buy a stock because its price is down. Buy because the company is strong. Because it has a future. Because it's building something the world needs. Examples. Apple is not just gadgets. It's building an ecosystem. Tesla is not just EVs. It's leading an energy revolution. Nvidia is not just chips. It's powering the global AI backbone. Know why you're buying. Because only conviction in value will help you survive market volatility. Strategy number 5, don't fear market corrections. Every major market crash in history was followed by an even greater rebound. 2008, market crashed. 2010 onwards, market surged. 2020, pandemic hit hard. 2021, tech stocks soared. Will it always happen that way? No guarantees. But history teaches us one thing, markets recover. And reward the patient. Strategy number 6, master emotions, not just numbers. You could have the world's best strategy. But if you lose to fear and panic, it's all worthless. When markets fall, there's a strong urge to get out before it gets worse. But that's when your mental strength is tested. Great investors don't have a crystal ball. They have calm and long-term conviction. Chapter 5, Case Studies, Learn from the Giants. Warren Buffett, the genius who waited when others panicked. Buffett isn't just successful. He's the wisdom of the markets. When crisis hits, he doesn't rush. He waits. He knows, when others are fearful, that's the best time to buy. Examples. In 2008, when the market crashed, Buffett invested heavily. He bought big-name stocks at low prices. 5 to 10 years later, billions in profits. He didn't buy gold. He didn't panic. He simply knew, be greedy when others are fearful, and fearful when others are greedy. Ray Dalio, the system is breaking. Ray Dalio, founder of Bridgewater, sees the system itself as unsustainable. Debt is exploding. Interest rates can't go lower. And quantitative easing has devalued currencies. So he suggests, hold gold to protect wealth. Diversify globally, not just in one country. Focus on long-term strength, not short-term gains. China, a nation's strategy, not just investment. Countries like China don't invest for the short term. They shape long-term economic power. And they know, if the world shakes, they must hold real assets. That's why they're shifting from dollars to gold. From dependence on Western systems to self-reliance. The lesson? If a giant like China is reducing reliance on the dollar, what should you be doing? Chapter 6: Common Investor Mistakes During Crisis. 1. Acting on emotion, selling out of fear, buying from FOMO. 2. No plan, buying without knowing why. 3. All in on one asset, massive risk, no protection. 4. Chasing quick wins, seeking fast money, losing it all. 5. Not learning, lazy to research, lazy to understand. A crisis is not the time to gamble. It's the time to think clearly. Chapter 7: Anti-Storm Portfolio, Building Balance. Imagine your portfolio is a ship. In a storm, the ship needs balance. A healthy portfolio during a crisis might look like this: 40% stocks in blue-chip companies, Apple, Tesla, Microsoft, etc. 20% government bonds. 10 to 15% gold. 5 to 10% real estate or REITs. 5% crypto, only if you understand the risks. 10% cash or cash equivalents for flexibility. This isn't a one-size-fits-all formula. But it's a framework for survival and growth. Chapter 8: Long-Term Mindset in Times of Uncertainty. Don't focus on today's prices. Look at the value 5 to 10 years from now. When you invest as though you'll hold those assets forever, you'll make wiser choices. Markets will rise, fall, even crash. But you must stay calm. True investors aren't those who get rich quick. They're those who endure. Remember, the greatest wealth is built during crises, not in calm times. Chapter 9: Preparing for Recovery Phases. Crises don't last forever. A new phase will always come, recovery. And when it does, stocks will surge. Technology will advance faster. Consumers will start spending again. New businesses will emerge. Who will benefit the most from this phase? Those who are ready. Those who are patient, consistent, and stick to their strategy. Chapter 10: Conclusion: When the world shakes, who is ready to rise? You can't control the markets. You can't stop recessions, inflation, or global crises. But you can control how you think. The strategy you choose for your assets. Your consistency in investing. Your calmness when the world panics. That's your power. And that power is enough to change your life. Don't let this crisis just be a bad story. Let it be the turning point for you. Start learning. Make a plan. Build your portfolio. Protect your wealth, and grow it slowly. The best time to act was yesterday. The second best time is now. Don't wait for everything to be clear to start moving. Because winners aren't those who wait for the perfect moment. Winners are those who make decisions even in uncertainty. The world is changing. You must change too. Because in the chaos, there are extraordinary opportunities for those who are ready.